Welcome back. You're tuned in to Editors Roundtable. Well, Meir, I want to ask you about the impact that GST rationalization can have on cement. Because cement, I've been speaking to all the players for the last 7-8 years. They're saying the GST should be lower, and now their want has come through. So from a government perspective, they lose close to 25,000 crores of revenues, but otherwise it could boost up, the system. But basically, as we all know, that cement demand is inelastic, right? Because the cost of making a house itself in rural India will be at 12 to around 13%. The cost of cement as a percentage of, of the total cost of production. And in urban India, it will be even less. So effectively, this cut will reduce the cost by, say, 1% at most. So that's why NBS says, no, it's inelastic. But what the street hope is that the cement prices become a little bit cheaper. So there'll be upgradation. Someone who was using, say, category C cement, they'll start using category B. Or the one that was using category B will start using category A. And in that sense, using a more premium product will help in terms of profitability. It could push through some volumes as well and, stimulate the economy on the whole. So that's going to be important, particularly for rural India. The other point is that, the duty on coal, everyone was worried, you're giving us this GST cut, but the coal will move up from 5% GST to around 18%. However, there was a cess as well of close to around 400 rupees, which goes away. So net, actually, that as well is a positive because now they'll only be paying 18% of GST. And finally, for me, this is the one worry that I'm looking at because the total GST was close to around 28%. Out of that, the state GST was around 14%. Now that comes down to around 9%. Many of these cement companies have put in capacities on the hope that, they'll get SGST, the state incentives. But if the state itself is getting lower GST, that in turn could, temper off some kind of those incentives, which is the fear. Though on capital that they're spending, the capital subsidies will continue. What is your view on the cement pack? Give and take everything, it looks like we're bracing for a better second half of the year. But how would you approach these stocks?
Certainly. So we are also playing for that, though we have very, very limited exposure to cement, mostly in the couple of mid-cap cement names. And there we are actually playing for capacity increase and volume growth rather than pricing power. My guess is that there will be a beneficial volume, as you said, impact, as well as little bit of margin impact. But I'm sure the government will keep a hawk's eye on prices being passed on to the consumer.
Yes.
They will not let the cement companies profit here. So our base case remains the same. We are still playing for volume growth and a little bit of market share gain for some of the stocks that are in the portfolio, which are setting up or already set up good capacities and now are ramping up the utilization.
Well, that's interesting, because from the time Prime Minister Narendra Modi indicated that there could be some rationalization, the cement companies are opportunistic. If you look at pricing was up by 25 to 30 rupees, and now they'll go ahead and they'll temper down on the pricing. So our net, there'll be some positive inflow actually on the margin front. But that consolidation theme is something that I'm eyeing, because in Gujarat we had, Sri Digvijay, that asset is turned from one PA to the other. They're trying to make the asset more marketable, so to call it. Otherwise, 3 million ton, no one is interested. Now they're doing, another deal when the next 3 years it could be a 6 million ton plant. And I understand here on the ground, a lot of cement players, larger ones, have visited the smaller players, be it in South India, be it in the Northeast India as well. So let's see whether the consolidation drive does continue. But I'm expecting at least one more deal to happen in the next 2-3 months.
It has to continue. It has to continue because beyond a point, the standalone cement plants will find it more and more difficult to remain profitable.
Yeah, and as you get bigger, then you get stronger and you have a bigger ask in the region. So I think that's going to be important as well.
Mihir, you said, right, it all boils down to individual stocks and you would prefer the small and mid-cap space. Give us like 2-3 ideas, right? Even if you can't name stocks, give us a way to think about, these ideas.
Sure. So one of the strategic or tactical, I don't know what to call it, changes that we've made in the last few months is a shift away from, we still overweight on the investments theme and the infrastructure theme, but we were not so overweight on the consumer discretionary theme. We were more into premium consumption. But now with the GST cuts happening, my view is that the government might actually have a little bit of shift of priorities. So, for example, it may not be a completely across the board bull run in infrastructure and investments theme, right? It probably may be restricted to a few priority sectors like, say, defense, where the necessity is there, or HVDC and power transmission and distribution, because you're setting up so much renewables and you need to balance it out with better transmission. So in infra, it may be more selective compared to, say, last year. And some of that overweight we are shifting to consumer discretionary, especially some of the newer business models and the,
the Zomato, Swiggy's, etc.
And a few more names in the logistics space, that kind of thing.
Okay. Well, that brings us to a close in this edition. Thank you very much, Mihir, for joining in. Well, enjoy your weekend, guys.
Yes.
We will get into a break on that note, but we'll come back Monday morning with all the news and updates. Stay tuned.